Hello YouTube, how are we doing? I'm doing great as well, thanks for asking. Today we'll be breaking down all the trades I took this week, and I'm also going to be breaking down Euro US dollar so that we can have an idea on what we should be expecting in the coming days or week. Throughout this market breakdown, we will focus on the daily chart, the 4-hour chart, the 15-minute chart. We will also cover market structure, supply and demand, and liquidity, which are key vital concepts you need to master if you want to become successful with your trading. I'm also going to be revealing the techniques I use in taking these trades, and it's these techniques that really help most of my members get funded and have their first ever profit split by using the power of our mechanical strategies. Without wasting any time, let's get started. Here we are on the chart. We are going to start by breaking down Euro US dollar, like I said, from the daily time frame right down to the 4-hour time frame, and when we are through, we go to the 15-minute, and I'm also going to show you all the trades I took. So it is very, very important for you to pay attention and follow everything we're going to be saying. So this is basically the structure we have right now on Euro US dollar. And if you look at this structure, you'll see that the swing structure is bullish because we have a breakup structure here. So this becomes our strong swing low, and this becomes our weak swing high. So the swing structure is bullish, which means market structure is to the upside. Now, this was our last fractal low that we had, and this was our fractal breakout structure. So we now have a change of character. So this change of character is signaling that what Euro US dollar wants to pull back, counter trend. It can be pulling back counter trend to some of the discount level. We don't know. Maybe most of these levels are already tested. Maybe you can just be pulling back to some of these levels and to continue going up bullish. But as it stands now, there is already a first sign to signal the start of a counter trend pullback, which is this one here. So we have already pulled back somehow, maybe to equilibrium, which is also somehow okay for a swing run to come in, but it's not sufficient enough. So this is our last internal low here. It's our last internal breakout structure, allowing us with this internal strong high and this internal weak low. So price ended here this week, and as price end here, this now becomes a supply level where price can react at. Okay, this now becomes a supply level where price can react at in the future. It could be next week, it could be after next week, we don't know. But the problem is that that is a level where price can react at. Okay, so we are just expecting price to push into this level and continue down. That should be our expectation. But we are not just going to trade if price goes to this level. Why? Because this zone also doesn't have inducement. And for those who already watch my liquidity video, they know the criteria I use in validating zones. So we'll also keep my eyes open here. So I prefer, maybe if the market opens, it drops here, I should instead buy and I go up here. That should be what I should be expecting on Euro US dollar. I should expect Euro US dollar to drop into this level for me to instead buy and go up, because this zone, it doesn't have, it actually has institutional backing, but it doesn't have all my liquidity criteria for me to just start selling there in anticipation that the market wants to go down like this and come down maybe to some of this discount level. So I need to be very, very careful when I'm looking at that level. So on my daily time frame on Euro US dollar, I am basically just expecting price to drop here. Then let me continue with my buy back to this level. And if it comes here and give all my criteria, then before I can now sell in anticipation of forming new internal breakout structure. So on our 4-hour, if you look very well, you see that the swing structure is clearly bearish. Why? The internal structure is also bearish as well, because this is the last big internal range that we have here. The swing structure is bearish. This is our strong swing, and this is actually our weak swing, which means that what the swing structure is bearish, facilitating that daily pullback. That daily fractal pullback is being facilitated by this 4-hour swing structure. Okay, that's how we do immersion structure. So as it's bearish, the internal structure also is bearish, and these ones now happening inside the internal, we refer to them as the internal of the internal, or the small internal structure. So if you keep following this program, or if you follow the market structure, that's where you're going to get these ideas. But this is our last internal strong swing, and this is our last internal weak swing, which means this is what we need to focus on. Okay, that's the picture which we need to focus on. So if you look very well, it is bearish, and we had a change of character here last week. Then the market now gave us a break, and this week we saw how the market pulled back to some of the indecisional supply and demand levels. I talked of this type of levels of supply that price can also hold there. You should always pay attention to them, even though you should not trade them, but always pay attention to them to see how price is reacting from there, so that you can know whether you are to look for a buy or a sell from those levels. Now, as the internal structure is bearish, we saw price pulling back to the internal range. Price is already at the premium of the internal range. It has mitigated a supply level here, a sell to buy supply level. And what do we have? We have a structure shift on the 4 hours here. So this structure shift is now signaling to us that truly price have tested a sell to buy supply level, which is actually a range supply level on the lower time frame, and it has given us a structure shift, and there is a chance that maybe the market wants to pull back now down to this demand level here, then before it continue now up, which is the same with what we were having on the daily time frame, because this is actually that daily range, that daily supply range, and this is that level on the 4 hour which has not been mitigated. So this daily supply range was never mitigated. Okay, so we're just expecting that since the 4 hour have already switched from mitigating a decisional level here, they were just expecting it to come here. Okay, that's what we should be expecting next week. We should be expecting Euro US dollar to drop to this level, and when it drop in here, then we should be expecting it to pull back to this supply now, and from here maybe a swing run can come in now, or the next internal swing run can come in. That should be what we should be expecting on Euro US dollar. But there was already a clear signs, and I'm going to also show you guys, and I'll show you guys plus the trick we actually took. Some of these analyses were based on the trade I took also, because I actually had a trade here. If you look, you see there's a position 2 here. I actually had a trade there also, and I'm also going to show you guys all those trades. So on our 15-minute time frame, you can clearly see that the swing structure is bearish. Why is the swing structure bearish on the 15-minute time frame? It is because it already gave a fractal trend change on the 4 hour. That fractal trend change on the 4 hour is a sign to signal to us that what? There is a start of a swing pullback on the 15-minute. So you can now have that idea and follow that swing pullback on the 15-minute with your lower time frame executions to fulfill that idea which the higher time frame wants to do. When the higher time frame switch with a fractal structure, it is a sign on the lower time frame that the direction of the market has changes, and your objective is to follow the direction of the market on your lower time frame, just like what we have here. So that's that change of character on the higher time frame. That change of character on the higher time frame, which is a 4 hour in that case, becomes a break of structure on this other time frame. It becomes a break of structure, which is this level here. As it becomes a break of structure, this now becomes our strong high. Okay, because that's the highest point that leads to this break. Then this becomes our weak low. Why? Because that's the lowest level that have started the pullback. So there was another one here that pullback, but we don't usually consider this one because it's not a sizable pullback. Our swing structure must be very, very sizable. So we want to use sizable ones. So that's how we usually do to determine them. For those who have gone through my program, they know how we do to pick swing structures. So we want to use only the ones that are sizable. So we refer to these ones as internal structure, and it's an internal structure in a continuation like this. So we view this as one push to the downside based on the system which I trade. So we later on had a change of character here because this was our last internal strong and this was our last internal weak here. So this change of character here was just to facilitate the pullback maybe to this supply level here or to this supply level here. So what happened? When the market gave this change of character here, it now pulled back to the demand level of that change of character and went now to this level. Why would we not be selling here? We did not sell here because this level did not have any of our criteria. For example, there was no inducement. We're expecting a pullback inducement, and the pullback inducement did not also form, so the zone actually fails. Okay, so we could not keep trading the internal structure. When it switches bullish, we already know that it is just switching to facilitate the pullback back to this swing run. And this level here, which we now have, which has now been tested, is that same level which we had on our higher time frame. Let's visit the higher time frame again so that you can actually see now that level clearly. So on our higher time frame, this is that level. Okay, so this is the change of character. That change of character was a swing break on the 15-minute. Then we now have price returning to that supply. So this one was just to pull back price to this supply level that gave this change of character. This was the first sign, because change of character, we said it is a reversal signal. It signals the start and end of a run. in the market. So maybe this one was just signaling that this run is complete and it wants to pull back a little. For another one to signal that the run is complete and the market will go up. That is why when you now come to this zone, you will now see the market actually testing it. It has tested that level. That level is also a higher time frame. That's why you see this big zone. This big zone is a higher time frame. Why this small one, which has also been tested, is the 15-minute. It's actually the 15-minute zone. Okay, so once it has been tested and it gave us a structure shift, that was in the night. I don't always trade in the night. So when it give that structure shift, we already saw. I came in the morning and I saw a sustainable internal structure building. So once I see sustainable internal structure building, I knew that there is a money making opportunity. So I just needed to look for the next internal structure and I entered there to continue because I already know the objective of the market. What is the objective of the market? The objective of the market is that what? It should leave from strong and target the weak. And also the objective of the market on the higher time frame, which is our 4-hour here in this case, actually is that we should actually trade from here and come down here. So if I'm selling, I am confident to hold enough because there's a lot of risk to reward ratio to target before I reach down to this level, because based on the idea I already have on my higher time frame, that is what it is telling me. It is basically telling me that what? We are going to leave from here and we'll come here because of this signal. That was why I had to take that trade there. And if you're actually doubting that I took this trade there, let me just look for the screenshot I dropped to this video so that you can also see it. So that was actually my entry. You can see how I entered and I also target this level. That was around 1:3.5 trade that I actually caught. So I'm going to also show you other trades which I took, but I want to go gradually so that I'll break down the market first. Please, if you have not watched a liquidity video, make sure you check the liquidity video so that you should not get lost with the criteria I use in validating my zones. So it did not meet those criteria, so I wait for liquidity to be taken. And once the liquidity got taken, I went down to my lower time frame and I look for my entry criteria. You must use your lower time frame for the entry criteria. And I'm sorry, I will not be able to show you guys entries on this video. Those are things which you can learn on my private mentorship. If you are interested, you can always check the link and you check them out, because if I show you entries, it will not be fair enough for members or in my community, the entries we use in entering the market. But maybe in the future, so just get yourself subscribed. Maybe in the future, we are going to cover all those things. So when we look at our entry, I now jumped into the trade and I came down, took my profit up here. But this now becomes our next internal structure, because this will now be our next internal strong high and this was our next internal big low. This was our supply level. So this market came down, mitigate this supply level. So when it mitigates this supply level, we also look at the zone also did not have inducement. So we were also expecting a pullback inducement to form, and we never really had a pullback inducement. So we also expect the high to go. So once the high was taken, that was where we could now start looking now for a sell. And this was when the high went. Okay, so you just need now to wait for it to give you a shift. Then now you come down here and you look at your entry on your lower time frame and you sell from here and go down. I never took this one, so I only want to show you the one I took. But that's how you could have done if you want to take this other trade here. What I took was this one, and that is what I'm showing you. I'm just showing you how I managed to understand structure and how I managed to continue with the flow of the market based on what? Based on the information I gathered on my 4-hour, which simply told me that what? There is a sign that the market wants to pull back, which means that what? I just need to stay on my lower time frame, or is it my medium time frame, and I keep looking for my sell opportunity. There will be a lot of them that will form. I will look for them until when this zone will be tested. Once this zone will be tested, somebody might be asking that why did I not use this one? Sometimes maybe the market will use this one, but this one will just be inducement to come down to this one. That is why I have instead showed you, but the one that I know that it has more information. This one here will be like an inducement. So if you are buying here, you should just be expecting a quick one. So you should just be buying with the inducement, knowing that what? The market will not go up and take out this high. So it is only when the market will come down to this level that you can now go and take out the high itself. There is a chance, because this one now is the last internal structure on the 4-hour time frame here. This is our last internal strong low and this is our last internal weak high. So once you take it, it's now going to tap here, then use that inducement now, push back now into this daily supply level. Okay, once you push to this daily supply level, then we are just expecting the daily supply level also doesn't have liquidity criteria. So we're just expecting our liquidity criteria to form there. And if our liquidity criteria doesn't form, or if it forms, then we are good to go. We'll now sell from there and go right down. Okay, that's our overall expectation. And That is also our overall expectation based on the trade I took on this currency. So let me now take you guys to all the trades I took this week. It is very important that when I've shown you what we're expecting on Euro US dollar, it could happen this week, it could happen next week, happen after next week, we don't know, but that is the overall long-term expectation based on the intraday time frames. Because if I'm showing you the daily time frame as your perspective time frame, then just know that it is for you to use that information and go to your intraday time frames to look for opportunities that are actually matching the edge which I'm actually showing you. I took 2 trades this week, and I'm going to start by showing you the one that was here. Okay, this move was caused by NFP last Friday. For those who saw my analysis of last week, they know that I call this level internal strong high, and this one was my internal weak low here. This was my internal breakout structure. So this was a supply level. It was a valid level where I could be looking for sell. Why did I buy instead of selling? It is because this zone did not have inducement, and when the market returned there, I was expecting inducement to be built here, and inducement did not be built. What happened? The high of that level was used, and not just the high was used by this candle, but when I came the next day, I saw a break and close above with the other candle. So that gave me a go ahead to say that, okay, this zone has been invalidated and the price is not going to hold there. Had it been swept and gave me good rejection down here, that was when I could be looking for a sell. All the trade idea is coming from the higher time frame. Don't go and you are getting your trade idea on your lower time frame without understanding the direction of the higher time frame. If you enter a trade, or if you're trying to enter a trade where you don't know the direction of the higher time frame, then you're going to get smashed majority of the time. Why? Because the market follows the direction of the higher time frame. Before I was showing you on the lower time frame, the idea came from the higher time frame that it wants to start pulling back. Had it been I never saw the market showing sign that it wants to start pulling back on from the higher time frame, I wouldn't have been selling here on the lower time frame. But once you see the idea, that is when you can now start selling. And that is why I'm telling you that once you have the confirmations on the higher time frame, then you are good to go. Once we now had this was my higher time frame that day, because I mostly trade M15 zones and M5 entry and M3 entry. Sometimes I go down to M1, but I focus mostly on M5 entries. My higher time frame is 4 hours, while my medium time frame is the 15 minute. That's the time frame I trade. But my idea comes from where? My higher time frame, which is the 4 hour. So that's why I was saying that once I had this candle here, it was a confirmation for me that truly the market will not actually use this level as a sweep. And even if it was to use it as a sweep, I even prefer that it should have built a structure down here. Those who are in market, they know what they call. We usually refer to it as PBL. Okay, they know what PBL is. So it should actually fail. The PBL of the zone should fail. And once the PBL now fail, will now confirm something that truly the market wants to turn. But so far as there was no PBL, there was no inducement, there was no PBID, then the zone is not actually going to hold. That was why I had that buy bias on my mind. So how could I do to back up that my buy bias which I actually had on my mind? It was by me now using now my medium time frame. I'm focusing on this level, please. So anything we're explaining is based on this level. What happened here on Monday? That's what we're explaining. So when I came now on my 15 minute that day, this was what I saw. I actually saw that truly that candle that closed on the 4 hour is now a break of structure here. That candle that closed on the 4 hour above this level has given a swing break of structure here. And this was now my strong swing, while this was now my weak swing. I had a change of character, and that change of character gave a signal, okay? It gave a signal that truly the swing pullback wants to start. And that is why I said this concept is very powerful and it's good for you to learn this approach. Why? Because instead of you just identifying your break of structure, drawing your supply and demand level, waiting for price to come here, once you see this sign, you can start selling from here, okay? Going down, selling all these ones. Why you come here and you buy with those who bought and go up? Because this one is the most powerful one. You can be selling this one while waiting for it to come here, and you buy with them and you increase your profit potential in the market. And had it been you sell here, you sell these ones and they gave you profit and this one failed, then you still be in profit. So it's a win-win. So that's why I've been insisting that you should try as much as possible to understand this so that you will be able to trade in any direction of the market without necessarily waiting for market to come to a specific demand level or a specific supply level before you trade. And all this cannot be achieved without you mastering what they call market structure. You must be a good master of market structure, and we have taught everything on market structure that you need. Unless you want to go for a mentorship program, that you can now reach out to me for that. But we have taught you everything you need on here to go with your trading. So this is actually the change of character. So price tested this level. Okay, when price tested this level, people could have sold here, yeah, but some people sold if they were using that level as a supply level. But I believe only my students can know, or if I've shown you today, this is a supply level, because with our own supply level can lead to a swing break of structure. It can be the one that has lead to internal break of structure, or it can be the one that has lead to what they call fractal break of structure. So this one has lead to what we call a fractal break of structure. So it is still a valid supply level. That's why we say we always have trading opportunities, because we are open to many chances, many things that are being created in the market. No matter how the market is, we are able to interpret and understand it. This change of character now left us with this supply level. So when the market came here on Monday, for those who trade on Monday, most of my students already know I don't trade on Monday, not because it's not good, but because Monday usually like to be choppy. Okay, this is Monday. You can see it's always usually like to be choppy. I don't like to trade on those such days. I like to trade when there is good volume in the market, like these days. Most reason why Monday usually tends to be choppy is because it is mostly bank holidays. Sometimes the markets are not always too open, or some banks might not be operating during those periods. So it's always very, very slow. So once we saw that, maybe for those who are trading on Monday, that was a good opportunity for them to sell back down to this level. Okay, they could be selling confidently back down to this level. Why? Because this could still be a liquidity for that high, even though I already judged it with a candle closure that it was no longer a liquidity from the higher time frame, but there was a confidence for you to sell back down to this level. So that was the first sell. Second sell did not form. This first sell also did not come and break the wick swing. Why? Because this zone did not have inducement. So the pullback inducement form, then it took now enough liquidity before it came now and break. So once it break, it now tap into this zone. My main focus was on this zone because that was the day I was trading, and it was on Tuesday. So I saw the internal structure being bearish. This was the last internal strong high, and this was the last internal weak low. Okay, so that was the last internal weak low, and I already know the level which I'm testing on the higher time frame. I already have my idea from the higher time frame before anything. As I had that level, what happened is that I now saw price testing into this my zone. This was my 15-minute zone. So as it tests my 15-minute swing supply range at the extreme level, I waited for my confirmations. Because it tested it, I waited for my confirmations to give all the criteria I need. And once it gave all those criteria, I went down to my lower time frame and I looked at my entry here, and I also entered for a 1:3 risk to reward ratio. So this was the two trades I took. I took this one on Tuesday and I took the other one on Friday. Those were just the two trades I took this week. I know most of my people have been taking trades. For those who are in our WhatsApp group, or those who are actually in the Telegram, sometimes I hardly share setups there, but I do. If you want to join, you can always check the link and join. For those who are there, they have been seeing how my students have been sharing trade results all the time. You can always learn from them, from their setups also. In most of this move, they traded them, but I did not, because I just traded those two, and that's why I'm showing you only what I knew that I traded. Not that the other moves were bad, but just that I was not opportune to trade them that time due to one or two reasons. So when the market now came here, we were expecting it to hold here because this was still a supply level. This is still a supply level like this. So we're expecting the market to hold there. Now it did not have any backing of our supply level. So what happened? It fails because there was none of those backings, those criteria we use for identifying our own zone that can hold high quality zones. I told you on institutional supply and demand levels. It did not happen. So it failed. Once it failed, internal structure have switched bullish. So we just need to keep looking for buy. Nothing formed. So there was nothing. After that, we had a swing break because the market has taken now the high that started a pullback. This high that started a pullback, it was our weak swing. So once the market comes now and break down the weak swing now turns to break of structure. Okay. So our new strong now will be here because now will be the lowest level that has come and break up here. So after that break, what happened? After the break, we were expecting a pullback, or a sign to give us that a pullback is coming in. And this is why I said our way of identifying change of character, break of structures, internal structures, swing structure is very, very good and unique. This was an opportunity where you could just keep buying the order flow going up. Why? Because there was no change of character. We only had a pullback, a break, a pullback, a break, a pullback, a break, a pullback, a break. There was no sign or there was no change of character signaling that the market wants to pull back. Where did we have a sign of a change of character signaling that there was a pullback? Even here, we almost had a sign signaling that there was a pullback, but this low never go because this is the low we use for our change of character. So since the low never went, there was no change of character, but this is the same low here. So when the low went, we now had a change of character. This was our first sign of relief to show that what truly this overextended swing run has completed and the market now wants to start pulling back. And it now gave this swing break, which also confirmed now with what I was showing you on the higher time frame, because I also show you this level on the higher time frame that this one was higher time frame change of character. So once it gave us that higher time frame change of character, it now allow us now with this our recent structure, which is the next trade I took, which is on this one on Friday. We now had our strong swing here and our weak swing. I already explained on the higher time frame, so I'm not going down on the higher time frame. Higher time frame change of character, swing break of structure on the 15-minute. Higher time frame price pullback to the higher time frame change of character, internal structure of the 15-minute pulling back, facilitating it to that higher time frame zone. Price test the higher time frame zone, price test the medium time frame. Remember, I'm trading medium time frame zones, which is 15-minute. So if price test my higher time frame zone without testing the 15-minute zone, I will not still trade. Because if I trade, I'm going to take a lot of losses. So I have to be patient enough and wait for price to test my medium time frame. Once it tests my medium time frame zones and give a shift, then I say, okay, we are good to go, because everything has been confirmed that truly, since the higher time frame and the medium time frame zone has been tested and the higher time frame already gave me that signal that it wants to pull back, then I can now come the next day and I just look for my sell and I continue with the order flow of the market. So you can see how the internal order flow was sustaining until here. So once I identify my entry criteria here on my lower time frame, I had to enter. Took some of my entries on 3 minutes, took some of them on 1 minute, took some of them on 5 minutes. There were 3 entries that I actually took. And we now have a new level, new strong high, new weak low, new level to trade off from. Most of my students were looking for this zone, and I told them that what? There is no inducement that has been built. So be careful, watch for your pullback inducement to build, and if your pullback inducement doesn't build, wait for the high to go. When the high go, you identify a shift, and you should actually now look for sell and you sell. So that's actually what happened this week, and we already know what we are expecting overall from Euro US dollar. Our expectation from Euro US dollar overall is that price should just leave from here and give this internal structure, pull back to another internal range, go, take the weak swing, pull back, go onto, it goes down where? Down to this level here. And where is this level on the higher time frame? If you check the higher time frame, you are going to see that that level which we are talking about is actually here. So that's the level here on the higher time frame. Okay, so that level is right down here. So we're just expecting it to sell right down to some of this level before the real buy will now come in. What I have for you guys on Euro US dollar, you should always let me know what you want me to cover. If not, whenever I have time, I'll always try to review 1 or 2 of my trades so that at least you can be increasing your experience. Meanwhile, you should keep watching my contents, because the more you watch them, that's the more you're going to learn. You should not just watch a video once and you think that is sufficient for you. You should always watch it so that you can actually increase your strike rate in the market, and always leave a comment. Your appreciation also encouraged me to work, so your comment counts a lot, and your like. So I will see you guys on the next video. As of now, continue to trust the process.